Hey everybody, this is John Kirby back with the Bear Trap Podcast. My co-host is Vic, and all chart reading credits, as always, go out to Auk. Hey everybody, sorry for the absence.
Yeah, it's my bad. I've been moving for the last 2 months, 3 months.
Well, you need a cozy trading environment, right? You can't. It's a top priority.
Right? Yeah, you can't be trading while you're all your stuff's disconnected and your house is in disarray. But we're settled now. We're good. I'm ready to be back and start killing. I did actually beat an Apex account in one day, a couple days before you started telling me that. It was kind of interesting.
How'd you do it? Did you take one trade, or did you
It was 2 trades. It was on a nice, flusher day. I can't remember which day it was, but I was just I just loaded up and I'm just gonna beat this all in one shot, And I ended up doing it. Of course, you got to wait 7 days to get the funded account. So I ended up just trading MES.
That's what I do. Then I take an MES and I just flip one every day, and then
exactly, yeah. And I was going to do more, but I was just let me just. And then with Apex, you can buy the lifetime account. I don't know if you knew that, but yeah, that was not very. I don't think a lot of people know about it, but that's kind of nice because instead of paying, I think $80 a month, $85 a month, you can pay $140 and just get it for life. If you're confident. Yeah, why wouldn't you do that? You should be confident for one. 2, it's only an extra $60 for forever. So one thing that always messed with me psychologically was having to pay the monthly fee. And that always messed with me, made me kind of think I had to trade every day. I had to take a trade. I had to make money every day.
That's a really good point. Yeah.
Out of pocket. So it helps me actually knowing I don't have to pay a monthly fee anymore.
That makes perfect sense. Yeah.
Whatever works.
I mean, for me, the weird change that happened with regards to those and why, because it wasn't, I made, you remember how we were talking a couple podcasts back and you were like, man, why are you making so many trades? So for instance, on one of the ones that I passed last week, I made 140 trades.
Golly, what in the world? Wait, in one day?
Yeah.
Jeez. Is that that's both ways though? I mean, the trade counts as opening and closing, right?
Yeah, so it was more like 70. And then usually what I do is I take an E-mini and then I'll I've developed this into my own system. So I agree, back when we talked, you were totally right. That was completely over trading. Now I don't think it is because I am scaling in and scaling out. It is very, very seldom that I actually lose money on a trade. So there's always 2 points that get taken off the first contract, and the second one ends up being a runner for 4 points or something like that. So then sort of over time, and then occasionally you'll get that 10, 20 point move. And so it's just
Do you ever look at your stats?
No, I haven't actually.
It's easy to see. You can go to, where to find that, right?
In Ninja or on Apex?
In Ninja. In Ninja, you can go to, let's see, it's under new, trade performance, under the new tab. Yeah. And you can look up.
That's cool.
You can look up a time period from your trades and stuff like that and see what your average trade is, see what your average win is. Over the last 7 days, it says my projected profit per month, just trading micros, would be $3,200 a month.
That's great.
And so that's kind of cool. You can kind of see what your.
No, that's super useful. I should do that. I think, one of the difference, oddly enough, I mean, I spent a lot of time with trading in the zone, and then one of the things I realized is that I need to be doing something else, man. So all of last week, I just spent the entire day on phone calls as I was trading.
Yeah.
And just talking to people. And so
distracted.
I was not thinking about what I was doing, man. I had no idea. And then I look back at the end of the day, I was like, did we close up or down? I'm I don't know. I just focus on the last 5 minutes, and that's it.
Is that part of your strat? Is focusing on the last 5 minutes, or?
Yeah. I'm not really thinking. So I do have SPY GEX levels up, so that I know that if we're hitting one, right, I don't want to be kind of dealing with unknowns, so to speak, but I'm not really thinking about, which is kind of funny because now we're about to talk about the overall landscape, and the overall landscape is something that I have not looked at for 2 weeks.
Me neither. I look at it once in the morning for about 5 minutes, and then I'm like, okay, I think I got it, and then I don't mess with it.
Exactly. That's so funny.
The more you look at, that's just maybe what you've realized too, is the more you look at it, the more paralysis by analysis you get, and that's just killer. Because, like you said, you don't want to be running into unknowns, but there's way too many to account for, right? So
yeah, it's like you don't want to run into an unknown that is really, really easy to prevent, but at the same time, you don't want to try and know everything or even to know too much because
it's dangerous to know too much because then you can't take a trade because there's always something else you're not taking into account. That's why they always say the best systems are always one that have like maybe one or two, maybe two variables.
Exactly.
At the max.
And that's exactly what I'm doing. I'm literally only looking at, one or two things, and if it works, it works. If it doesn't work, okay, I get stopped out for 1 or 2 points.
Yep. And if you talk to anybody that automates strategies, that's what they always say too, is like as soon as you start adding in more than 3 variables, it just becomes like all the data and backtesting and optimizing, that it just becomes too fitted.
Exactly. I was about to say overfitting, 100%.
Yep.
This is also the difference between, and I'll move on after this one, but that's the difference between backtesting strategies, which leads to overfitting, and quote unquote forward testing strategies, which relies on sort of just simply theorizing and just, experimenting.
Right.
Which you'd think would be worse, but it isn't necessarily worse, actually.
Right. Yep. Yeah. No, for sure. Let's look at this. So we got SPY here, which is sort of everybody's baby, sort of a punk to trade. There's just it's the premiums lately have been kind of jacked, and that makes it tough to trade options on it.
I was trying to trade 0DTE SPX on Friday, and the spreads.
Is that even possible?
Yeah, good question. The spreads I was paying, so on top of commissions, I was paying approximately $10 per trade in slippage.
Jeez.
Yeah. And I remember I was like up on this trade by like $50 or something, and I wanted to get out because I was done for the day. And I remember hitting I hit a market sell because I'm an idiot. But actually also because I'm not an idiot, because I really wanted to get out, right? And right at that moment, SPY has a red candle, and I ended up getting filled $50 underneath what it had currently been trading out when I hit the button.
Wow. So you ended up losing money because you hit market?
Yeah. Well, I was up. Yeah, I ended up losing $20 because I was up there. I mean, it was like, I'm talking about actual dollars, not like options dollars, so it wasn't like a big deal. But yeah, right. It was insane. It was.
Well, I'm looking at these SPY premiums, and I'm going, okay, yeah. I mean, the only way I could possibly trade this premium here is if I buy it one strike out of the money, or buy at the money, because otherwise it's like, man, if I'm trying to buy these 2 or 3 points out of the money, it's not really making a lot of sense for me.
Yeah, that was also crazy. I was like, I don't know. I mean, luckily I had it, like my trades were decent enough that I still made money on Friday with SPX, but it was so hard because I was getting long options premium. I don't know why I just, force of habit. With 0DTE SPX, but it was the most idiotic thing to do. It was like there was no way. Like I would get into a position, SPX would move in my direction, and yet because it would move not fast enough, and it was moving pretty damn fast, the price of the option would stay exactly the same.
Yeah,
because the theta was so crazy.
The theta is so crazy, and the skew on the upside is so low, so flat, right? I mean, isn't that kind of playing into it?
Exactly.
So that IP just doesn't hit like it does on the other side.
100%, which is so crazy when you think about it, because I'd be scared of some upside volatility, and this actually gets us to aside from thinking about GEX or anything like that, it kind of gets us to okay, where are they pushing the market right now? And it's pretty clear, right?
Right. Right. Yeah, I mean, it seems clear it seems clear to me that it's not clear to anybody what's going on. That's what it seems clear to me. I know it's a bear market. I mean, I'm pretty sure about that, and that people that think it's going to be a bull market are probably, I don't know, being a little naive, but we can talk about it. Let's look at the open interest and see what the data says here.
Yeah, so only thing I really see when I look at this open interest chart is that we don't have, I mean, I just remember looking at this earlier in the year and just seeing us squeeze whenever we had this many puts out there on SPY.
Yeah. So at what point do you discount a lot of these puts? Because it's sort of like a similar picture every cycle. We've always got, tons of puts out there just sitting there. And at what point do you just discount most of it?
Well, I mean, here it's pretty clear that it's just after Wednesday.
Yeah.
And the reason I
just
say
for
that,
the FOMC.
Yeah, I mean, also look at how much red there is all the way over here, right? Like most of this stuff is all about the FOMC right now.
Mm-hmm.
And so like if these things are gonna squeeze us up, it's gonna be for FOMC, which makes a lot of sense to me. And then afterwards, we're clear for more downside, in my opinion.
And yeah, so after FOMC, maybe you get a squeeze up to what, like 400?
Exactly. Yeah, that's the that would be sort of the sweet spot on the skew. I'm pretty sure. I mean, somebody just pulled it here, so I can actually open it up and take a look. And
why is 400? Why is 400 the sweet spot?
So it's a little bit of guesswork, at least the way that I'm looking at this right now. But it's sort of like it's two things happening at the same time. One is that if you look at these further out DTEs, so right, these guys over here are all pre-FOMC. And then the red lines here are post-FOMC, the ones right underneath, the sort of cluster of lines underneath. And 400, to me, it looks really like the point at which like a divot would start to form, simply because I don't know how many of you guys have done, calculus and stuff, but like if you take this is the inflection point in sort of like the classic sense of an x to the third type of function, where it sort of curves first this way and then it curves that way. And it's like here, not only is the first derivative 0, but the second derivative is also 0.
Right.
Yeah. Does that make sense?
It makes sense. It makes sense. I wouldn't be able to do the actual calculation if you gave it to me, but I know what you're talking about.
You can, yeah, if you look at a lot of these, you just kind of like start to see it. I think
you're basically saying, okay, this skew here is going to start naturally curling up. Because it's too cheap. Exactly. That's what I see.
Exactly. That's exactly right. Yeah.
Why would you not be in these post FOMC calls above 400 right now?
Yeah, and it's basically, I'm kind of trying to think about it like, okay, more simply, which part of the curve is going to become the divot, is going to become the minimum? And what conveys that to me is like, to me, I see like there's a hump happening here, and then just around here, the sort of, it's like, I don't know if there's better language than the mathematical language to describe this, but the derivative flips, right? Here the function is decreasing at an increasing rate, decreasing at a decreasing rate, and here it starts to decrease at an increasing rate, and there's that flip right there, actually.
Right. Yeah. So you're saying there's an inflection point here at 400, which, obviously is a huge level. It's been a huge level. It's a huge cycle level. If you look at the open interest, there's a big level there on the OI chart where there's a lot of calls, a lot of puts sitting there.
Yeah, exactly. 400. Yeah, it's split. It sort of is. If you like look at those charts of like where does the whole complex flip, and we end up, or that point where all of a sudden there start to actually be calls versus puts. it's pretty clear that 400 is sort of that line in the sand still, oddly enough.
Yep. You can't negate 400 yet, and I agree with this 100%, especially going into what has typically been an IV crush event, right? Like there's just so much event vol built into the FOMCs that if he does nothing but come out and do what everyone expects, then there should be a squeeze.
Yeah, and it merits saying too, right? If you want to look for that squeeze or you want to ride the squeeze, look for the event vol crush to happen in the skew, right? Look for the camel hump to kind of dissipate and then turn into basically for, let me pull this guy up again, basically for this guy to start to look like, the red guys to start to look like the green guy over here.
To start to normalize, because those are going to be sort of that's the normal investment skew. And these other ones are sort of inflated a little bit in the middle.
Yeah, they're fat.
Exactly. Or what would you call that? Yeah, they're fat. What would you call that? Is it leptokurtic? Is what they call that? I believe when it's up like that.
I think. Yeah, I mean, yeah.
Platykurtic is when it's flat. Leptokurtic is when it's more like it's almost inverted right now.
Dude, let's just call it fat.
Yeah, we'll just keep it easy. But yeah, whenever you start saying these big words, it just kind of throws everything off. But yeah, so okay, I agree with that. Let's see if the other charts sort of line up with this initial thesis here, at least going into FOMC.
Do you want to go through the whole SPY complex, or you want to hop over to NDX first?
Let's keep with SPY here, and then we'll go into NDX.
All right, so here's our delta hedging exposure. Let me zoom in a little bit more. I don't know why the hell I'm so terrible at zooming on preview. Okay, there we go. That's nice. Right,
cool.
I pulled these 100 strike charts, everybody, just because I wanted to make sure I wasn't missing anything. But
right. No, yeah, and I think it's pretty easy to see the whole distribution here, at least as of Friday's close.
I actually kind of like, Vic, that we can't really see which ones are like which strikes or anything. We're just kind of looking at the whole thing.
Right, a big top-down, just the distribution of probabilities here, right? So we're seeing sort of, it looks like the hedging is going on. Sort of what we're talking about here, where it's just between like this 390 and 400.
Yeah, it's like there's a ton of in the money puts right here, and then there's another ton of in the money puts at 400, and either those people monetize or they don't. The 390 people, there's more of the like shorter DTE 390 in the monies, and so those are definitely going to have to monetize here, which would make me, kind of not to pile on, but I kind of see the same thing here.
Same sort of situation. Yeah, these guys are going to have to. Well, they're not in the money actually as of Friday.
Fair.
So where we opened up, we didn't open up with a gap down, which is maybe what they were hoping for. So going into FOMC, those guys are sort of under the gun, right? Like hoping for an FOMC crater.
On the plus side, the fact that skew is humped over like that is actually giving them a little bit of boost. In other words, their IV isn't dying in the same way it normally would.
100%, and you're right. It'll probably stay elevated until the event. So that's a good point.
So it's not unreasonable to essentially, for that reason, kind of expect chop between these two strikes.
Yep.
Into the event, and then like as the event happens, maybe we get one of those like pops above 400. And then a massive sell-off to follow or something like that. That would be kind of cool.
That is sort of like, if I was looking at these charts, that would be my initial thesis to run off of is selling a huge pop and after the FOMC. After all of this kind of dissipates out. Is there another SPY chart here that we can look at that sort of?
Yeah, there is. Also, just a comment, but I like how we're analyzing in the same way as we were just talking about how we should trade. We're just like, because you haven't, at least I haven't looked at these before. I feel like we're just,
Nope. I don't want to think about it too much. It's just what it is. And let's just keep going. So far, everything is showing me the same thing, which is good. The GEX chart, it's like if I was just to look at only this chart, I would get the same idea that you got a lot of negative GEX here that is expiring into, well, that would be Monday, right? The really dark red is going to be tomorrow.
That's all Monday, yeah.
And so I would expect there to be support in the market.
Or sorry, half of it is Monday because there's the really dark red is like half
really
of it's
dark
here
red, yeah.
and the lighter red here. But yeah,
I would think the lows probably hold into like 390, 385. I don't really see a squeeze. And the only reason I say that is because of what you said as far as that event ball being sitting in the skew.
Exactly. Yeah. If we didn't have any event ball, then this would be a ripper, like this would be just.
I would think it's ripper. Yeah. But I also don't think it's a diver either, because for people to come in and continue to buy the elevated vol, I don't know if that makes a lot of sense. It could happen, but to be able to drive us lower, they would have to continue buying it.
Well, they're overpaying. And then the other thing is that if you think about it in terms of how much you would have to buy in order to move this picture.
That's what I mean.
Yeah, it's so much, man.
And they could do that, and if it came to FOMC and J Powell comes out and says, yeah, we're probably just gonna not hike this time. We may see 420, dude, if that happens. So, and they may be able to get another situation where they can get this market buoyed up again for enough sell.
If he does that, I'm just I don't know, my brain's gonna explode, I think.
Yeah, it would be insane. A lot of people's brains they would be stunned. They would be stunned. But yeah, this same picture, it sort of just says the same thing. Like, hey, and that's what's great about this GEX chart is it's taken what we're looking at, and look, it's given us the call wall and the put wall that we were just looking at in the OI, and it's basically saying like we're just kind of stuck in this little range here, and you're seeing what I see is a lot of people sitting there in puts. And I think maybe it's because there was a little bit of fear in the banking crisis and all that kind of stuff. So there's a lot of people just still sitting there waiting for a sell.
Oh, man.
And I've gotten messages already like, hey, are we going to sell? Because my puts are dying, and I was just like, I can't help you, man. It doesn't look like it to me. It doesn't make any sense. They're taking the vol out of the market, even though.
Well, I mean, I know what to answer to that. It's like, have you heard of a calendar?
Yeah, I mean, and that's something that will help traders as they start figuring out, how to game the vol side of your option and try to hedge it a little bit.
Yeah,
it'll help out a lot. Using spreads and. That kind of stuff. Just playing naked options, man. I don't even do that hardly anymore, dude, because it's like if you can look at the skew and you can kind of see what part of the chain is overpriced, why are you not selling that expensive?
Oh, there's no real efficient value in playing naked options for very long. So what I'll do, like sometimes because what you want is if you want the like full leverage bang for your buck, that only occurs between like the 30 delta and the 50 delta. So if let's say you buy a call and it's at a 30 delta and then it runs up to a 50, you should either sell it or you should roll it to another 30 delta if you think the move's going to continue, right?
Yeah, no reason to hold it because, there's no reason to hold it. You got to roll it.
Yeah.
Or sell against it. I don't know. You could sell something against it, but.
That's my favorite little game, actually.
Selling against an inflated position.
Exactly. Yeah, and then sell precisely that. Well, okay. Anyhow, to continue.
Yeah.
We can look at this VEX chart. Actually, it didn't really.
I never look at these charts, so I never understood I tried to make sense of them. It never really made sense to me to use it. And honestly, lately, dude, I've only looked at the GEX chart. I don't even look at DEX or OI anymore. So
I think that's totally fair. I mean,
maybe once a week I look at them, but I really only check the GEX.
Well, think about it like this. So we know what the skew picture looks like, right? Basically, what would happen if the skew curve as a whole were to go up by 1 or 2 vol points, or let's say 5 vol points, and that's going to happen into the FOMC.
Yeah.
These bars are going to tell you how all of these options are going to gain value as that happens.
Okay.
So basically, when like we know, I mean, and this is kind of obvious if you look at GEX, like you already know all this, right? But like the 390 puts are going to gain the most IV. And so basically they're going to start to look like a massive, massive strike as we go into FOMC.
Isn't this saying that the IV is already elevated at 390? Isn't it saying like, hey, if you were going to try and play Vega, then you'd want to be short the 390 because it's the biggest level?
So it's the one that stands to gain the most from a change in IV because it's at the money. But if in terms of like net IV, right?
Okay.
But if you want to play for the largest gain, and I've done this when I'm hedging or whatever, which is that, like let's say if I were to hedge the downside for something like this, I wouldn't take the 390 because I don't care about gaining in terms of net IV points because I'm already overpaying for IV. I'd probably actually go for, like a 365 or something here where you can tell that like as the whole complex moves down, this guy is going to have as much Vega as the 390 has right now.
They say there's a hole there, and if we start moving down, there's a hole in the Vega, and it'll grow to about that level.
Yeah, exactly. And then the option that you would be selling at that point, it would technically be the option with the highest Vega or the highest implied vol sensitivity. So then it would be the most expensive relative to what you paid for your implied vol in the first place.
I see. Yeah, that makes sense. So do you use this chart trading?
Yeah, I mean, I use it for like my bigger portfolio. If I'm going to put on a hedge, I want to be like, okay, I want to put on the best bang for my buck type of hedge. So, but I'm not going to use it in terms of like day-to-day trading options and whatever. I mean, it's kind of it's not as important as the gamma exposure and like actual levels and stuff. So
sure.
Okay. Yeah.
Nice.
Okay, but that was probably not the most useful.
Most useful
tangent. That was
cool. You're the first one, and I see other people using the Vex chart in the bot, but I've never found use for it in my particular type of trading. So it's interesting to hear that you're using it.
Dude, I think it's for, you know what it is? It's like for AUK trading, basically.
Yeah. This is an AUK chart here where it was just for his curiosity, I think, at one point.
100%. Do you want to take a look at the NDX? And this is you, not because I.
Oh yeah, I just kind of wanted to glance at it. I haven't looked at it in a long time, and I used to, but just because of the relative strength of tech, which I think Jim talked about. He was saying something about there just being an insane amount of puts in tech oriented stocks, and that's why there was so much strength going into the OPEX. But I just wanted to keep tabs on it now because I don't know if that continues or not. Is there still a lot of puts sitting here on tech or not? And if those are gone, because if they're gone, then there's likely to be a bigger downside to tech, I think.
I mean, so how do you usually read this? Like, is this a lot? Is this a little? I'm not used to looking.
Well, so what I like about it is I'll usually pair it up with the Q and kind of just see, but the NDX was just a little bit clearer because you can just see these massive levels, and it's almost like the big funds. If they're if you're in Qs, the picture's a little bit muddy. But if you're playing NDX, which I don't think most retail is playing NDX. I've never even traded NDX before. I mean, I trade Q and I'll trade NQ, but I've never messed with NDX. And so I feel like there's only big funds playing it. So it almost seemed like a little bit of a cheat code for me to be able to go in here and be like, well, obviously this 13,000 level is a thing. It's something I would need to pay attention to because it's like the only thing that's sticking out here. Okay, well, let's look at the Qs. Is there a commensurate level with the Qs that lines up with this idea?
I'm pulling it up right now.
You can sort of see like the 12,000 to 13,000 on NDX, and then there's that middle spot, which is where we're trading. So we're right in the middle of this range on NDX.
Let's see. Is that the 320?
I'm not sure. I would usually calculate it out and sort of see if there's a correlation or whatever. But there's something I would add to my. I have this notepad with all these numbers on it, and I would just be like, okay, I got to watch this 13,000 NDX, put it up on the watch list, if we start getting close to it, obviously it's going to start sort of acting like a magnet. And it's just something you would want to pay attention to.
Okay, here we go. I think I found it, man. Yeah, here we go. It is definitely that guy.
It's got to be that guy. So there is a.
Oh wow, dude, that's a 360.
And so I'm not sure if this is some big fund. Is this why there's so much strength in tech right now? Because there's just this giant level sitting up there. It's sort of like if you ever trade, the level 2 on like whatever, and you see some big guy putting a big limit order up there, right?
Yeah.
Down below. It's sort of like that, where it's just like, is this sort of someone spoofing the options market? You know what I mean? Kind of.
I mean, it reminds me honestly of the JPM caller, but I don't know of a JPM caller.
It does. It reminds me of that too. But it's like, do they do that in Qs too, and we just don't talk about it? I mean, I guess I could see that happening, but again, it's more of like, okay, the more you look at, the more you just either confuse yourself or you start building a better body of evidence for a theory or whatever. It's something I just want to look at and see, just because, again, the strength in tech, I got to start paying attention to it because it was outperforming like crazy. So, okay, well, I'll just start looking at tech then. And if that's where the easy money is right now, I want to at least know, where it's possibly going to go, because I hardly ever look at Qs.
I will say, I mean, there are a good number of puts on the QQQ, nowhere near like the same structure that we had as SPY. But then when I look at the NDX, I don't see anything basically.
Yeah, and so there's a lot of in the money calls here. Is sort of what I'm looking at here. So for me, that's sort of a bullish structure the way the NDX looks. But again, if there's no puts, then it's unhedged. So then there's that too. If there's some kind of event or something like that, then this thing could really fall.
I mean, we would have to wait for these guys to come off probably on the Qs as well. So same as SPY, right? It's just kind of like.
So they're hedging with the Qs, and then they're just leaving NDX out to dry because the Qs are already going to hold everything up. I guess that's what they're kind of thinking.
Yeah, that makes sense to me. And then they're also allowing, letting retail get short on the ETF side of things, and then they're just hanging out long with the big boy contracts.
Right. Exactly. And well, I don't know how many times that when I was looking at this NDX chart, I'd be like, okay, this 13,000 is obviously popping out, and it would go to 13,000. And it's like all I had to do was look at the stinking NDX chart and know that NQ is going to 13,000 because this is basically the only level on the entire chain. And it's like there was just this one fund driving everything.
You realize like how that's far. That is far.
I agree. No, and I'm not saying that's what's going to happen here by any stretch of the imagination. I just know that when I was looking at it, and this was like early on in my GEX days, but I was just looking at everything. I'd be like, man, that's so interesting. There's like this huge level on NDX, and there's nothing else really. And then we'd end up going to that level.
I mean, those guys are also in September.
True.
The green. So I guess
for sure.
I guess there's a good amount of time on it.
Think about that though. It's like, well, so you've got this huge level. I mean, as far as relative to the rest of these levels, it's the only one that matters. And there's one down lower around 12,000 that matters, but it's like, yeah, they got it out till September. Okay, well, that's in 6 months. So is NDX going to be held up for another 4 or 5 months? If that's the case, then anybody's theory about a market crash coming in doesn't really make sense with this picture.
That's true. This is confusing unless it is a JPM sort of thing, in which case they could always be short calls.
Well, so how do we figure this out? I mean, we could basically go look at, because this is just an OI, we could go look at NDX GEX, or this is GEX, right?
No, this is OI.
Do you have the NDX GEX over here on the side? Let's look at
that.
Yeah,
there's nothing on there though.
Okay, so there's no exposure there. So there's no reason for a market maker to really be afraid of taking it there. There's 12,700.
Yeah, I mean the reason though it's not showing up on the GEX is just that that's so far out of the money that
Yeah.
It doesn't even register as much gamma exposure.
There's no gamma exposure yet, right?
Yeah. Yeah.
And that you still have the put wall that we're under, and you still have a wall. It's probably most likely a call wall there at 12.7. But this isn't necessarily a bearish picture either. If you're just looking at this, you just have a wall there at 12.6.
Oh, one issue here, I messed up. This is just the this isn't a Gex N. This is just a net Gex. Sorry,
Okay.
it's just, yeah, exactly.
Okay. So this is just a Gex, right?
Yeah.
And this is just for the next expiry.
Yeah. I'm pulling up the other one right now.
Again, well, that's fine. For the next expiry, I mean, I can't be really that bearish if I'm looking at this, given the structure. We're right in the middle of all this positive gamma. And the only thing you have to worry about is 12.6.
Yeah, this just looks like, coming up to 12.6 and then parking there, basically.
Yeah, either parking there or busting through there. And then if you bust through there, you're going right to 12.7.
Yeah. That's fair enough. Although this is probably because it's not a net Gex, it's probably really small. 200K contracts. Let's compare that over here. Oh.
No, I think that's 200. I think that's 200K dollars. But
because it's the Gex. Yeah, you're right. Yeah, so it's barely anything.
Yeah, it's. I mean, yeah, you're right. It's not really registering on a dollar scale. It's not really registering that much.
Yeah, that's my bad. That's the wrong expiry. But yeah, I mean, this is weird. I'm glad that you brought it up. I'm gonna try and figure out what the hell's going on. I mean, it really wouldn't surprise me if JPM has another fund that does the same sort of collar strategy on the Qs, because why wouldn't you?
It looks just like every time you've looked at that collar on SPX, it looks just like it does. You got this big level here at 13,000. You got a big level down there at 12,000. It just makes sense to me that they would probably have another one, and just nobody talks about it. Maybe because it's just too small.
Yeah.
And nobody hedges in NDX. They hedge in SPX and SPY, so it just doesn't mean anything really. But
do you still have time? Do you still have time to look at the VIX?
Yeah, let's do it.
Okay. I still need to pull that one. VIX. Yeah, maybe I could just grab it directly off here. There we go. Nice. All right. What do you see, man?
Something about the VIX is it does look a lot different than usual, but this is going to be the one expire. Like all that red is expiring on Wednesday into the FOMC, but then you also have some. You also have some positive GEX going out to the further expiries. So this cycle, I don't know if you saw my tweet about this next cycle or next couple cycles with VIX are likely to be different than what we're used to. And my theory is that, and this is just something I've stolen from Jem, but this volatility supply that we've been seeing, where everybody was always hedged and sort of getting tired of losing money, either being long VIX or long SPX puts. And even though we go down, or even though the market is bearish, you still lose money on all these hedges, right?
Yeah.
His theory was like around this time, you're going to start seeing, the funds that were doing that, hedging that way, are going to get tired of it. And they're not going to do that anymore. So then you're going to have this cycle where the market can finally move again, and you'll start seeing VIX sort of come alive again. So that's kind of my theory right now, is like next couple cycles probably see VIX bid up, being supported in a way as folks start getting back into their old ways of hedging through VIX or hedging through SPX.
I mean, that would be really cool. And I do remember that those, it was like months where we had VIX around 30 or something, and we just like ping pong between, what was it, like 30, 33, 28.
Yep.
It was a good time.
Exactly. And maybe it's just me dreaming and hoping, but it's what I see too, because I mean, I've looked at the VIX for a year and a half now, and I've seen quite a few of these VIX-X cycles. And it is a lot of the times, man. It's just like, it just seems like the VIX is just a piece of shit, dude. And every time it goes up, it goes right back to 20, right? And it's just like, it just makes sense. There's just so many hedges that come off every time, the market gets a little relief. Everybody dumps their hedges.
Well, that's also part of the zero DTE structure. I think that like
maybe
it has it's almost like half of what Jem is saying makes sense, right? And then there's another half that doesn't make sense. What does make sense is, okay, clearly in the beginning half of the year, they were long vol. Maybe they were using the VIX to some extent and it just wasn't working. I totally get that. But at the same time, we had this zero DTE complex that just completely took off. And you have a ton of players in the zero DTE vol space. And I want to call it the zero DTE vol space because it's a different vol environment than everything else, right? Because the pressure to liquidate by EOD is so much higher because you know that everybody else is going to liquidate. So there's this reflexivity. So it's almost as if the vol cycles of the market are playing out intraday rather than on the monthly basis. And the VIX was constructed to work on a monthly basis.
Right.
So it's almost a structural thing. I don't even know if I would say that like vol hasn't been paying out. It's just that people have been looking for vol in the wrong place.
And he did mention that too, and you may be alluding to what he was talking about, where instead of buying vol in the monthly, they're playing for the realized vol on the daily.
Exactly.
Using zero DTE. So they're not playing for implied anymore.
Why I'm habitually long zero DTE premium instead of short premium as I tend to do on longer expirations. It's this very crazy calendar trade that's been going on where you literally buy options every day and you sell options on the monthly.
Mm-hmm.
It's crazy.
Yep. Yeah. And you know what? Hey, take advantage of it while you can. I mean, if it's working for you right now, keep doing it, dude. Until that edge is gone, essentially someone's going to start figuring out doing it with you. But
yeah.
And I'm sure they have, but yeah, just keep doing it, man. But that may be playing in, you probably just, basically alluded to it better than what I was saying, was that this cycle is going to be more of a VIX is sort of uncapped in a way. And you're kind of seeing it too, it went to 29, 30, went back to 22, then went back to 28. Now it's just kind of hovering in like the 25, 28 range. These large ranges, man, like think about if you were trying to play VIX calls, and dude, I'm so mad at myself around 18 VIX. I was like, I should just buy some VIX. Why am I not buying this? And literally that day is when it took off.
Oh, and I've been there, man. That happened to me last year, where I used some VIX calls to hedge my portfolio in a very crucial time, and I like made, I don't know, like $800 with them, and I was like, okay, cool, that's great, I'll take them off. I had enough time to get out of my other positions, and that was the moment where the VIX also went, like you're saying, from, I don't know if it was 18 or somewhere around there to like 35 in 3 days.
Yeah.
And I calculated and I was like, this would have been a 10K trade, and I got out after the first K.
Man, exactly. And it was on that VIX X too. I calculated it all out. It was like the VIX X. I'm like, it was the next day. I was like, all right, man, it's sitting here at the lows, 18. I'm pretty sure it breaks 21 today. And I don't know what made me thought that. I think it was just because I knew all that VIX gamma had expired. And yeah, sure enough, and that was the day it went to like 29 or something.
Jesus.
Yeah, all you had to do was buy a couple 20s.
Okay, but we also both know, right, like that the trades, the profits that you miss out on, they hurt you so much more than the losers or the winners benefit you.
Yeah, for sure.
So I mean,
especially
you
the big ones
probably
too.
executed correctly. Let's be honest. Like you probably took profits when you should have taken profits, and.
Well, yeah, I was playing Tesla over here, the slug, and and I was like sitting there like, man, I should be long, at least be long EVXY shares or something here. I mean, why would I not own this? It's so cheap. I already know it's uncapped. The ceiling has come off, and I know any moment it's going to explode. And of course it did, but it's all good, man. This is all part of learning. What year are we into using GEX, right? I mean, it's like maybe my second year, if that. maybe year and a half. So it's like you got to watch a few cycles before you really understand what's happening underneath the ceiling, underneath the scenes. And
that's totally true. Actually, I have a question for you. So on the VIX GAX, I'm seeing these red bars, right? It's a pretty good number of red bars. Those all expire in the morning before the Fed meeting, because I'm looking over here, and it's March 22. That's the AM expiry.
But you need to look at the next one too. Because that starts the next cycle of hedging. Mm-hmm. This has sort of been my theory anyways. And it's like, okay, well, if the next cycle is bearish on VIX, then you're probably going to start seeing a ripper or at least a melt up in SPX. But if it's still bullish on VIX, then you're probably going to see the market dive again.
And you're right. I mean, it is still actually bullish on VIX, I think.
Well, so let's see. Yeah, I mean, you can look at the put call ratio. A lot of times that's kind of deceiving. It's like almost always like that. But I think people are selling vol in most cases, or selling calls.
I'm just looking at the fact that I think I see, like, if I look over here at, the April 19th AMs, actually, it's really hard to tell with this particular chart.
I mean, if you're asking me what I think, it still looks bullish because under 23, there's not a lot of negative GACs out into the future expiries. And so I would just use it with a grain of salt. I sort of use it like I've told my buddy Tux. I've always told him, like, it's just an RSI of the demand for SPX puts. So you're sort of just building this out as like a sort of like an oscillator in a way. And you're sitting here, just if you want to equate it to RSI, you're sitting here at like RSI 80 on demand for SPX puts. And what's nice is that you can kind of see out into the future in a way and see if that RSI 80 is going to stay there or not. And it sort of looks like it would out until a couple expiries of VIX. You're going to see.
That's a really wonderful way of putting it. Yeah.
You're going to see it sitting at 25, 26, 30. Are we going to attempt to go up into the 40 range? It would take quite an event to take us to 40. But I do see 30 in VIX's future, at least for the next couple expiries. And I told my buddy Manny, I was like, all right, man, you're going to see VIX go to 25 and 30 for the next couple weeks. Sure enough, like literally that day, that was the day I was going to buy VIX, and I didn't because I'm a better analyst than I am trader. And sure enough, that's exactly what happened.
Yeah, that's why we make these podcasts, man, so that other people can make money.
Other people can make, yeah. And it's funny because if you ever read Mark Douglas's books, he talks about that same phenomenon where he was losing money like crazy, and it was like he could tell his clients what to do, and they would go gangbusters making money, and he could never make money on his own. So it's just a funny phenomenon that you get when you're a trader.
I've had the same exact experience also.
I think everybody goes through it, which is just why trading is so fun, because it's like, man, I knew that was going to happen. Why didn't you just take the trade? Well, because I don't want to lose money. It's like you never really know for sure. And that's another reason people probably gravitate to the buy and sell signal on like an algorithm or something, because it's so much easier just to take the buy signal. And
I mean, dude, that's why I close my eyes and click, or like I'm on the phone and I click. It's because
it is easier when you're distracted. I like what you brought that up, because it's like if you have something else to do, then you're not watching every tick.
And the other thing is, and I think this is like a really good how to call it, like heuristic to see if you're in a trading mindset, or it's kind of the same thing as. I've been using this example, right? If you go for a jog with a buddy and you can have a conversation with the person that you're jogging with, then you know that you're in pretty decent shape. And you're going at a pace that's relatively comfortable for you, but isn't crazy. Should be the same with trading, right? If you're trading and you cannot talk to anybody while you're trading because you're so hyper-focused, because you're so aware of your risk, you're so scared of what's happening, then you're probably not in a good place to be trading.
Right, exactly. Yep.
If you're comfy in your positions, you can have a conversation with the person sitting next to you. I leave the door to my office open. I let people come in, do whatever they want. And that's how I know I'm good.
Such a good example of that was the other day. I was taking a trade on ES futures, and I had just shorted a couple contracts at like 85s or something, and I was like 90% sure this trade was good. And so I just left. I didn't even put a stop on or nothing. I went and closed my house. I had to go do a walkthrough with the house, did all that. I almost forgot about it. Came back and I was up 30 points.
That's awesome, dude.
And that's and I don't know how many times that happens where I was like, I just know this trade is good. I don't even need to think about it. And then I'll get into trades where I'm doing exactly what you're saying. I'm hyper focused on it. I can't talk to anybody. I'm biting at people if they even try to mess with me. Like, just leave me alone. I just need to, trying to force the trade in a way. I think that's sort of where it comes from. It's like you're trying to make money back, or you're trying to force a trade, and you're sitting there watching it like,
yeah, and you think that the harder you focus, the more the market's going to be what you want,
And that's just and the more you let the market come to you, the easier the trade is to see, like the obvious thing.
Yeah.
And that's what you're talking about. Being in the zone, it's like you'll see the trade and it'll just become plain to you.
Dude, and that experience can be as simple as noticing. I distinctly remember there was this one day I had a couple weeks ago where I wasn't using GEX, I wasn't using anything. It's just like we opened, the market went up. I think we'd squeeze like 0.6%. So and then started to come off, and then it made a lower high. And I distinctly remember thinking, oh, this is a lower high. I should short. So I shorted, and that was the whole trade. And it was, the analysis was that simple. And then in hindsight, I looked at it and I was like, was there anything else that was relevant at that time? No, it's just that.
You were just in the flow, man. And again, like Mark Douglas, if you guys listening to this want to read a good psychology book for market trading, it talks about being in the now flow of opportunity. And so being present, looking at what is the opportunity at this moment. And like we were talking about before, the simple answer is usually right. The easy analysis is usually correct. And your first gut instinct is probably right. The more you look at this stuff, especially GEX, man, I feel bad because people get into GEX and they, and it's pretty complicated. One, the data is delayed. Okay. And it changes all the time. So you're looking at delayed data. So you pull up a SPY GEX that's 11 minutes old. Okay. You're not getting a new one for 4 minutes. And you shouldn't make a trade off of 11-minute old GEX. That's what I think.
Well, and I
that's
just
dated.
Stressed in the open interest video, not only is the GEX delayed, but then also the open interest is yesterday.
It's from this morning, and all this morning is just showing what yesterday's change was. So yeah, that's super delayed too. Those are really just to kind of find. You're trying to build like a framework to trade within. I think with open interest and GEX, you need to have sort of an idea of, okay, the market's probably not going to go past this level or below this level.
Yeah,
and that's really it. You're putting yourself. It could, yeah, it could.
We've had really significant, actually. I mean, this is a little, mini market history, but really significant instances this last couple of weeks, especially on those 2 days where Powell was coming out and talking in front of Congress or whatever, 10 a.m. 2 days in a row, and vol just kept on coming up, and so you'd see these massive 0 DTE put walls actually break. Without as much resistance as one would expect. And I think part of it was just because of the way that the days were set up. And let's say you're just looking at GEX and you're not thinking about Powell, which, you should be probably, but, I understand it if you want to trade purely based on technicals or whatever, that's fine. Those are very, very clear instances where massive rules of GEX gamma exposure were quote unquote broken.
Mm-hmm. Yeah. And those will, and that's the other thing too, is if you're not aware of, basically you want to be aware of calendar events, because that's where the GEX ties in and the open interests are tying in, because people are looking at the calendar events and then they're placing their options bets based on them. Right. So if you're not aware of FOMC and you're trying to trade GEX, well, then you got to be prepared for some, sigma moves, right? You're going to have a standard deviation move, and that's
what that reminds me of for some reason, buying options without thinking, or selling options without thinking about how FOMC is coming. I just got this image of you walking into a car wash just without your car and just getting washed by all the car wash things.
And then getting washed with boiling hot water,
and you're like, well, My indicator said that getting to Starbucks meant going this way. So
yeah, my cell phone alarm went off, so I went to get a car wash. It's like, dude, yeah, you got to be aware. You got to be aware of the the impending threat and doom. And that's the whole thing about doing this podcast, which is nice because you get to kind of talk about the the surrounding context and environment that really is building the picture that you're looking at. Because there's a lot more to it, but that's what makes it hard to trade because it's so much subjectivity that it just takes time to get experience with it, because eventually you start seeing the same cycle play itself over and you'll be like, man, I saw this, 2 cycles ago.
Mm-hmm.
And I know exactly how I would have played it then. And I said, I'm going to do it this time. And then like in this case here, I haven't really experienced too many positive VIX environments. You know what I mean?
That's true. Although I mean, this particular cycle, I think based on what we're talking about, if we had to give financial advice, and of course this is not financial advice.
Nope, not financial. Nope.
The main advice is don't trade for the next little bit, probably.
Yeah, either that or do the opposite of what you've been doing, because that's sort of like what's going to happen is you're going to have a ceiling on. This is my own theory. Is you're going to have a ceiling on SPX, and you have a floor on. Well, you have a ceiling on SPX, and you also have a ceiling on VIX. Is sort of the way I look at it, because VIX can only go so high. But then you also have a floor on VIX too, and so you got to figure out where those are, and that's sort of what's going to kind of give you an idea of what SPX is going to do. But it's definitely not going to all-time highs, in my opinion. I would not expect that, and I don't think they're going to have melt up or anything like that either. Not until maybe June or July. Kick around, you may start seeing that, but. I don't think so.
Yeah, we're in a good spot to just jump around for a little while.
It's going to be big range, chop city type of thing. So sort of what I think of. And right now, what do we close at? 25 VIX. You may see VIX. So based on this, you'd see VIX come down to like 23, and then you'd want to get short. I think that's what I think. Then you'd want to get short. I think you'd want to be, buy some puts or be long VIX. Crazy enough.